Welcome to this session of Proving Data Strategies. This is a web series brought to you by Asterisk Intelligence and designed to prove the value that data can bring to your credit union. So if you'd like to watch other webinars on different topics in this series, the recordings are published at study.cuanswers.com. So we have those all online. And my name is Annalyn Hawks. I'm a business intelligence analyst with CU Answers. And today I want to talk about analyzing non-interest income. So we'll spend some time looking at tools, data, strategies, and different tactics that I recommend for digging into this topic. We'll probably start with some simple trends, and then we will get into a little bit just different ways to slice the data, a few more advanced analytical strategies through the tools that we have available to look at the data you have on this topic. Okay, so the first question I really want to ask and think through for myself and us today is, what are we going to talk about as non-interest income? Now, really this could be a pretty wide scope here. We could be talking about just about anything that obviously is not interest income, but this is usually from a standpoint of keeping analysis simple and straightforward, and the resources we're going to look at today are primarily going to focus on income from fees and charges. So there's a bunch of different labels you can attach to the types of fees, and some folks will say, well, a fee is a charge, and some of those discussions could be had, but for the purpose of today's discussion, we really are going to look at it from the standpoint of saying we've got that sort of angle of income that we're focusing on, possibly transactional fees as an example, maybe one of those insufficient funds or automated non-return fees, and a processing fee, maybe struggling to think of an example right there actually at the moment, but service charges might be, for example, a minimum balance fee that you have configured. Now, interchange income is definitely something that is worth considering and talking about and thinking about, at least. I don't know that we'll touch on it real heavily today, but there is kind of always that question of, especially if you're trying to do a profitability analysis, which I'll talk about more, at least that concept in a second, and not from the purpose of trying to do one, but just my thoughts on it. There's that question of, do I include interchange income if I'm trying to evaluate membership profitability? And we'll come back to that topic. Again, like I said, we're not going to do a real deep dive into interchange income at this point in time, but do know, just as a quick point of understanding, that the value, the dollar amount of what you're actually receiving as interchange income is not stored anywhere in the system. You know, that is going to vary by credit union, by vendor, etc., and that really doesn't come to us. So any discussion about interchange income is going to need to work with other data that doesn't come from the core. So the core does, of course, know all about fees and different charges you've configured to apply to a membership or to a situation or to an account. And we'll be able to look in pretty deep depth at that. So where is data on fees? Well, first, it's stored in a variety of different places, and we'll cover that in just a second, but let's just think a little bit more high level for a second and understand that there's really two shapes that this data comes in. And that is, it's posted to the membership as a member transaction. You could pull up phone operator inquiry, teller, and look at the account history, and you see a transaction posted to the membership. In the history of their membership, you'll see that minimum balance fee, you'll see the dormancy fee, you'll see the statement style fee, you'll see the NSF fee, the non-return fee. You'll see all those posted to the membership. And transaction posting programs code them all certain ways, and there's ways to know if there's some technical details that go into coding out if the transaction was reversed later on, but it does not get super detailed about which exact origin transaction any particular fee is posted to, and that'll be relevant later. Same thing though with journal entries. So anytime a transaction posts to a membership, you're going to see it on the member history, but on the back end, of course, there's money moving around general ledgers. So every transaction is debiting or crediting, or or both, both essentially, a general ledger somewhere. And we can see information on that GL posting history. Now, a lot of times folks want to link these together in as high-level ways you can. You can try to reconcile, and keyword try there, try to reconcile the membership history and postings with the GL postings. But generally speaking, there is no one single identifier or string that ties any GL entry to for a fee specifically to the origin transaction that caused that fee. Fee to fee, if you're looking for a fee amount compared to a fee amount, that's a little more realistic. But if we're talking about looking for an origin, the original transaction, say $500, tried to hit the account, it caused an insufficient funds, a fee for $25, the GL is really going to be able to know there was a $25 fee and tie that out to the fact that there was a $25 fee on the member transaction history. It's not going to be able to say it was exactly this $500 caused by this $500 deposit charge from something through PayPal or something like that. So it does get a little muddy. If you've ever tried to do this, you're kind of, you already know what I'm kind of getting at. So just keep that in mind. Now, from a technical standpoint, data on fees for member history is stored in different files, different locations than the journal entries are, the GL history. And for those of you who may be interested in attempting to look these up through query, here's what those file names are, along with a few other ones. These files listed sort of in the middle here for member fee totals and member fees posted and waived. These are some files that are generated on a monthly basis, looking at prior month. And if in the case of detail, we go back 90 days, and for summary, it's a monthly summary back to the point that we started drawing data for the dashboard these all feed. But these middle section of files are really helpful for doing fee income analysis or just an analysis on your fee waiver programs. If you've got a fee configured to allow waivers on certain age groups or based on having certain types of accounts, and you want to see if possibly you're waiving like more than 50 to 60% of those fees based on those filters. Perhaps you opened that up a little too much and you'd like to tighten that up and that's a simple, quick way to get fee income increased, is to tighten up those exclusions a little bit. Carefully, of course, because as any marketer will tell you, you change the member experience and all of a sudden they're charged a fee for something that they were not previously charged a fee for. You may have some phone calls coming in, so there may be some messaging required, but I'm getting a little ahead of myself talking about an example here, but hopefully you can see the vision. So these are the data tables behind some of the tools that we'll see later. NSFAN is another one that is highly specific. It's a niche file really focused on just the insufficient funds and automated non-return transactional fees. But for those of you who use query, these are definitely one of the first couple places to look. If you're going to open up a query, just pop one of these files in, see what is in there, how it's structured, and if it might be helpful to your project. But for those of you who don't use query, no worries. We're definitely not going to spend too much, if any, time in it today. The tools that these data files feed should be more than enough to get you down the path that you need as you look at some of this data and attempt to do some analysis on these non-interest income sources. Okay, so the tools. What tools are we going to look at? I'm talking about how these will be more than enough for you. And specifically, these couple on the screen are the ones I want to try to hit today. If there's any we don't have time to get to, then definitely reach out to us and we'd be happy to share some doc and get you pointed in the right direction. But for the moment, the plan is to hit Analytics Booth and check out the 10-year trends by GL account and also the 3-year GL account balance comparison. Now, Analytics Booth is a subscriber-only platform. We have about half of all credit unions I work with are subscribed to this platform. So whether you use it or not, your credit union may be subscribed. If you are questioning that at all, let us know and we can look up who your admins are and confirm your status. But if you are not subscribed to Analytics Booth, then know that there is core equivalents. The tools that tool numbers 1011 and 1018 are the equivalents in CU Base. So you don't need to have a subscription to Analytics Booth, but that's what we will look at today. Now, the rest of these are all tools we will find in the core in CU Base Gold. We'll spend most of our time probably in tool 369, the fee, income, and waivers analysis dashboard. Then certainly pay attention to tool 370 and 372. They talk about two sides of a similar issue here. Is those fees that are fee opportunities, but for many variety of reasons, they either will get waived, so that member is never assessed the fee, or the member gets assessed the fee, but they received a refund later on. Neither of those situations result in income for yourself. So we've got to account for that. Once we get to trying to get these numbers down to something meaningful for us. Another tool is kind of a relatively newer one, is the General Ledger Activity Validation Dashboard. I just want to make sure we are able to see that one and you're able to see what it can do. It covers a lot of some of the same things we'll see in the Analytics Booth tools or the 10-year and 3-year GL tools, but with a slightly different time slicing aspect and comparison and calculations as we validate one time period against another for what's getting posted in those fee GLs. And then learn from peer. This is something we are asked for as on one level or another periodically, is this concept, that we are the core, so we have a bit of a global view. Is there any way we could compile that together in some fashion that could safely, and not exposing any personal details about a credit union or member data, and of course in any way at all, but some type of compilation that can help credit unions cooperatively share with each other and learn from each other. And in the Learn from Peer dashboards, of course, there is even an option to view the CEO's contact information if you yourself, or you want to reach out to your executives if you're not the CEO and say, here's something interesting I see in how XYZ credit union is doing that. There are phone transfer fees. What do you think about reaching out and maybe seeing if they can, they're willing to talk to us about their policies, methodologies here, what results they saw. And if they're willing to share their detailed data at that point, then you've certainly got a conversation going. So that idea of working collaboratively within the network of all other credit unions on the core to assess your fee programs is certainly something exciting to me. Okay, let's get transitioned into the first tool I want to look at. I'll get myself set up with Analytics Booth, pull that up here in a moment. And I got it. So this is the main menu of Analytics Booth, and we are going to focus today exclusively on dashboards. So there is not any daily trending data or daily GL data that we do send to the Analytics Booth warehousing system for displaying to you as alerts or trends. So you won't find any of that information or data in those sections, at least at this point in time. But we will find it in a couple of those dashboards, the names of which I mentioned earlier, the 3-year dashboard and the 10-year dashboard. Both of these look at general ledger accounts, either individually or groups of them by budget group. And the scope is way wider than just fee GLs, okay? So this is the whole scope of your chart of accounts. And you could use these to look at anything, income, expense, asset, liability, general ledger accounts, again, individually or by group. So to get some of the filtering capability, I just came into 3-year, and we can see month by month the past 3 years, current year, prior year, and 2 years ago. But I'm going to expand to show the filters because I want to be able to focus down. Right now, the data is everything, okay? So I want to get income GLs only. Everything recalculates. Don't care about a specific branch at this point in time, but I need to either choose a specific GL or a group of GLs that are coded into a budget group. Now, a specific GL is certainly applicable. Say you're interested in seeing what the numbers have been tracking for your skip-a-pay fee. If you've been if COVID has prompted you to either reduce those fees or waive them more often, or even entirely stop charging them, you can get some calculations on kind of how far behind that has put you as far as maintaining the same level of income as you have in prior years, just by picking on the specific GL that you have set up for your skip-a-pay fee. Now, not all of you will have a specific GL for a skip-a-pay fee, and I have seen, it's a little bit more rare maybe, but I've seen credit unions with just about every fee, not all of them, but most of them sort of consolidated into one GL, just called fees and charges, okay? If that's the case, then we will have to send you back to the core to get some of the specificity of, what the purpose, what types of fees we're talking about when we hit the GL account. But for those of you who do have it broken out to a separate GL for each type of fee, you have that option to either pick one of them or choose a budget group. And I'll stick with budget groups for this time. And a budget group might be something like this one: income on fines, ATM fees, credit card fees, or something. Checking and debit card income is kind of interesting. Might pick on that too, but I'll stick with this budget group. And we can see all the GLs that are in this budget group here. So there's a skip-a-pay fee. Here's your courtesy, a stretch pay product, something going on there. Kind of a broadly categorized, broadly labeled one there, some Kasasa stuff. So there is quite a bit of that non-interest income grouped all together in just this one budget group, which means that the numbers we see down here are cumulative to include all the income that's getting posted, the net end of month impact of all those GLs cumulatively. If we wanted to see one specific, let's pick on skip-a-pay. We'll pick that. And sure enough, yes, for this credit union, it looks like they just turned that feature off for April, May, and June so far. But up to that point, they had got $6,400 in fee income from offering skip-a-pays, 52 of which they had by the end of February. So it was really not a large gain on March. Must have been mid-March maybe, which would make total sense with some of the COVID lockdown stuff in the area of this credit union kind of hitting its hottest moments in the middle of March as credit unions adjusted around that point in time in their area. So obviously, end of month balance continues to remain static at $6,400. If we were to pull this information down to Excel, we could create a quick graph, a quick sort of just a line graph trending this out across these various different years. Okay. One thing I like at the bottom, though, is the annual growth calculation. So keep in mind we're still anchored onto the skip-a-pay fee GL. That's one specific fee product. And we're able to see that 2018 compared to 2017. Keep in mind, if you haven't been on the core as long as, as far back as 2017, these numbers, we won't have data to calculate for you sometimes. So just use your critical thinking skills when you're talking about sort of what data do we have and if we think the number is accurate or not. But for this credit union from 2017 to 2018, there was 111% growth. This 11,000 number at year-end balance represents 111% growth. Then by end of year 2019, we've got 106% growth, doubled really, the income from this one fee program. Now, of course, the adjustments made in 2020 have impacted with the pace at which we're kind of gaining income from this particular fee program this year. But notice in prior years, there's been whole periods of time where they just stopped offering the program and it was not something that was available to members in certain months. So as things may develop, possibly we may turn this on in the latter half of the year and get easily up to the same 2019 or 2018 levels. Who knows? for this credit union. But here is where we can see the data that quantifies how it has actually been moving and performing in the past, recent past, I should say, and this year so far. Now, we could also toggle this over to look at percentages and the percent change. I find this is an interesting one if we want to do some of that annual planning stuff, is to demonstrate this number as a percent change and what months are we looking for, what's the word I'm thinking of? A seasonality impact on some of these. Let's go back to all the GL accounts in this budget group. And of course, pull some statistics out here. Is 22.5% annual growth on fee income from 18 to 19. And the current year will always be a little bit negative. But what I like to do is come up to the last month we do have data uploaded to Analytics Booth 4 and just compare across the row how this is on pace with previous years. Okay, so we're already above where we were at same time in 2018, but we're not quite on pace to reach the same level of fee income in cumulative total for this budget group that we had where we were at in 2019 at this point in time. So we're a little behind pace, but doing still pretty decently, depending on, if we were looking for 22.5% growth this year as well, then we're really behind. But all of that is dependent upon what your goals are and what you want to say you were looking for as far as, the philosophies of whether or not fee income is something you want to drastically increase at your credit union, or if you want to say reduce it. Potentially you're looking to reduce it with more waiver opportunities, returning profits to members through your fee programs and opportunities, lower fees or more chances to reduce or opt out of fees. It all depends on what your philosophy and thinking is there as far as, what kind of statements we're going to make about these numbers. So let's flip out of here, go back to dashboards, and this time pick on the 10-year trends. Now let's do the skip a pay fee again. Just pick a GL account, skip, what was that? Let's do the search. There we go, 154.10. And here, so it looks like the first time that program was offered was 2013. That might be the year they converted to our system. That would make sense as to why the prior years in this 10-year time frame are entirely empty. So keeping that in mind, could have been halfway in the year of 2013. Maybe we'll totally ignore this year as well. Let's draw it as a graph real quick. This is one of my favorite things to do, and honestly, I'm kind of regretting I did not show it to us first here, because this is the simplest way to come get a quick look at any one of your fee programs and how across the last 10 years or however much data you have in the system, 5 years, whatever it may be, what the shape of income growth or decline has been for this fee program. So an interesting shape for skip-a-pay here, and if we took the forecast off, that's what the dashed line is. Obviously we're straight at zeros, and now we can see we're all the way up to, we're on track to take it off the chart. Of course, the scaling would adjust if we were showing you stuff like that, but this forecasting, if you leave it on, you're going to need to explain what it is to anybody you're sharing this graph with. Otherwise, they're going to say, hang on, why am I tanking downward? And all this is it's saying it's looking at 2020. It's a negative 71.9% change at this point in time. So this number for, say, potentially, I don't know, for another product might be a little higher, a little bit more of a true estimate of where we think we'll end the year as far as a forecasting perspective goes. But if it doesn't make sense or it's just confusing, just turn it off. That's one of my favorite tricks. A lot of people don't realize you can just turn it off. And you can do that by clicking the legend item down here. That would just turn it off. Let's pick on another fee. Account transfer fee. Let's go with the account transfer fee. Must not have even instituted this fee until 2017. And again, we could go right to a budget group, okay? So we could pick on that budget group we had that was a cumulative look at many different types of fee income GLs that are grouped together into one single total. That would, of course, update the table and update the graphs for us. Very cool. These are my favorite to pull out and throw into a quick report or analysis right here. Now, that'll be all I think we look at in Analytics Booth today. So real quick, before we even hit the core, I do want to take a pit stop and just talk about waivers and refunds. As I said a second ago, they're going to impact your net income. You know, there are fee opportunities that are not being assessed to the members or are being reversed and therefore essentially is a wash. So it's two angles of the same outcome, okay? The fee opportunity is not materializing into income. If you want to understand if these two angles are impacting if you're saying, why is my fee income so low? I'm wondering why it's not higher. I think it should be higher. Or over the course of the last 5 years, our fee income has steadily gone down. And I'm not sure why. I don't know what the culprit is. I don't know what fee is causing this problem. Did we make a config change at some point that somebody just didn't know what strings were going to get pulled and that all of a sudden 50% more members are getting this fee waived after that config changed? Things like that may come up as a research analysis project. And understanding the difference between these two is critical to any of that sort of more detailed research analysis style effort. Okay, so a waiver is when the system or a person waived the fee before it could be charged. So a perfect example of this is of a person waiving the fee before it could be charged is the phone transfer fee. If you have this turned on, it's a fee that is there's a checkbox in the screens that involve doing a transfer through phone operator, just a simple transfer from checking to savings. And if that member is calling through the phone and you're handling it through the phone operator features, then it's going to charge a fee, or it will default to charging a fee. But the person that is on the phone with that member could choose to uncheck the box that says uncheck the box that says charge them a phone transfer fee. Why are they going to choose to uncheck that box? Well, it could be because of any number of reasons that you allow them to, right? So if you give them a little bit of leeway in saying use your judgment, if depending on this person's situation, it may make sense to just kind of bypass the fee, make sure they know that normally there's a fee and you're happy to waive it today, whatever the situation might be. So you've got a staff person who has the power to uncheck that box, which means that no fee will get charged. But by default, it will charge the fee otherwise. Now, that's an example of a person taking the initiative to waive that fee. And that is something that I see credit unions tracking from a reporting standpoint quite often. You're looking at which employees are waiving the most fees, trying to catch somebody who's maybe just a little button happy and perhaps a people pleaser on wanting to waive all those fees for people left and right, and it could be a coaching opportunity. Or, figuring out what are these situations this person is getting handled and what's, basically what is going on if there's an employee with significantly more waived fees that they're choosing to waive. But an example of the system waiving a fee before it could be charged is, let's say, the minimum balance service charge fee. Okay, so if normally you have a product that charges a minimum balance service charge, you might say, if you have this product and you're not yet 24 years old, we will waive this fee. But as soon as you have your 24th birthday, we're going to start charging you this fee. That is an example of a coded threshold where the system recognizes this membership, the primary person on this membership is not yet 24, so waive the fee. But it is a fee opportunity. Normally, that person would be waived the fee because they have the product that requires that fee. But we're going to waive this fee because they haven't met the age threshold. All of that is happening before the member never sees anything. All of that's happening before anything gets posted to the membership, and in fact, nothing ever does get posted to the membership. So waivers are kind of looking at that gray space between an opportunity and assessment of a fee, and recognizing when the decision is made either by the system or the person to stop any posting of a fee. A refund is entirely reactive, looking at a fee that already posted either by a person or the system, and the member says, or you say, well, that was in error, or the member disputes it and you do agree to refund that fee. To the member, it's considered a refund. To you on the back end, though, this could be a totally different GLs involved than actual fee income GLs. So it's hard to get. Refunds definitely become quite a bit trickier, because whether it's a system or a person, if you're doing an account adjustment, it typically involves, again, different GLs than the ones that were involved in the original member transaction posting. So this is why I say always look at refund data, but really try to avoid and try to educate folks you're working with about the reasons why reconciling specific, a specific path of a transaction, a fee and a potential refund later on is not a good idea. Just take the numbers, the aggregate numbers, the totals, and that will match up for you. But to try to track a specific transaction through to a potential refund and where that refund might have been posted and how and what GLs were involved, it's not a simple task, and usually not worth it unless you have a hyper-specific research issue on a specific member, specific transaction, and then we're not talking analysis anymore. We're just talking about inquiry and maintenance, right? Okay, so let's open up the core and get into one of my favorite tools, Tool 369. So in this tool, it's a nice summary, line by line, of different fee types and service charges. Now, most of these are transactional fees or, as I said, service charges. There's certain niche programs, specific programs, or processing fees we are not going to see in here. Still, it's a good summary and overview of a lot of those sources of non-interest income. Now, an example of a specific fee we don't see here, it'll probably stand out pretty quick, is the skip-a-pay fees. There's a separate dashboard that deals with skip-a-pays, and there's a few other lookup tools that deal with some of those other processing fees as well. And don't forget about looking at general ledger GLs for those as well. But, right here in Tool 369, what we have is a really clean summary of 2 given months, any 2 that you choose, but typically it's defaulted to show you the last 2 calendar months of full data that we have. So for now, that is July 2020 and June 2020. So it's not really a comparison. It's not proactively doing any comparative calculations for you, but what it does side by side here is it lets you make that visual comparison. And we'll do it in a second, but honestly, one of my favorite things to do when I'm doing a fee analysis is start doing, especially if it's a research analysis, and I'm looking for potential clues and reasons as to why there might be unexplained increase or unexplained decrease in my fee income, is to take an annual approach. So we might change this one to July of 2019, and of course that's now right next to July of 2020. Now don't want to do that yet, because first I want to also show you that we try to make things real easy for you to be able to pull out and share data. So in a lot of our dashboards, we will have these export panels, and for some of you, we've talked about these just all over all the time before, but just briefly, if you click any one of these 3 buttons, it's going to essentially extract the information on the screen, so nothing off the screen if you have to scroll down or anything, but at least everything on the screen is going to pull down for you. And Excel is the most popular option. If we were to click Excel and go ahead and extract that, it's going to come up like this. So we got a nice Excel document with all the numbers in here. They're workable. We can now set calculations, maybe format it a little bit, and each of these tabs has some charts. Or the PDF option does require a license that you need to purchase from us. But there's nothing new or special in there. It's totally optional. The only thing different about the PDF option is that it'll take everything we just saw in the Excel and on the screen today, and it'll organize it into, let's get this up real quick, load, okay. Organizes it into a nicely formatted, visually pleasing summary with borders and headers and page numbers as we scroll down. And this is something that's real clean and easy to throw into a board packet. That was our thought and idea in giving you something that is got a little higher production value. Okay, so I haven't even done a single thing as far as setting a filter at this point. It's easy to pull this data out and have it to support your statements and your theories. Now, it'll pull out whatever's on the screen. So if we did choose to take that annual look, type the new month in, hit enter. So now everything here is a year ago July, everything here is this year July. Again, Excel and PDF is going to bring down the data that we have. And this goes back quite a ways. We could get this summarized data to show on this screen all the way back to the point we started collecting data for this dashboard, which I believe is 2016. Don't quote me too much on that. The help doc could definitely confirm it if you were to click the help doc for this screen, but at least right around there. And then, or if you've converted to the core more recently, whichever one is more recent. But the point is you can go back quite a ways. So, and yeah, we can pick any 2 months. If you were to go straight to the underlying data, you could get all the months at once. If you downloaded it to Excel using, use query to get all the months and then download the file to Excel. But this tool, of course, lets us pick 2 of those months, and we get to take a quick look at where some differences are. So how do we check and see, what differences might we find here? Well, first of all, what we're measuring with this dashboard, as the title suggests, is fee income and waivers. So right there, we're sort of telling us what's missing from that list is refunds. There's nothing in here that controls for refunded fees. So when we look at fees charged, keep in mind that this number is impacted by refunds, whether that's minimally or insignificantly. That remains to be seen as we pull up data and other tools. But that is an asterisk we'll have to attach to this column of charged data. Now, we're looking at amounts right now. So for the top row, account service charges, this is $1,400 in opportunities for fee income. We charged almost all of those fees to realize almost all of that income. We waived $80 worth of income. So 5.4% of this income opportunity was lost, for lack of a better word. Unassessed. Okay. Now, next one down, cash check fees. This is still, remember, July 2019, so a year ago, July. And almost 100% of the potential opportunities were waived. Why is that? Well, that could be policy, that could be the way your configs are set up. I'm not sure why just 1 or 2 or a couple fees are charged, and the same thing happens to be true this year, although a lot less opportunities, it looks like. So we could dig into this. This spyglass button takes us into the reasons these fees are getting waived. And looks like the vast majority at $5,700 is because the member's aggregate savings exceeds the maximum amount. So that begs the question, how much do I have the maximum amount set to? And how come this many members are getting this fee waived right now? Well, let's back up and click the other button here. The italicized I next to cash check fees lets us see what our current configurations are. So fees are going to be waived if a member has an aggregate savings of at least $50. Now, you may think that's a little conservative, or not conservative, I'm sorry. You may think that's a little bit liberal as far as basically saying across all your savings accounts, if you have at least $50, we aren't going to charge you a check cashing fee. But for this credit union, that may be just simply that on a matter that they've said this is one way we're going to give back to members, is, we're just going to make sure that they know if they've got at least this much money with us, they can always check cash checks here. No questions asked, no fees charged. But still have the fee configured to make it possible to still charge it for some of these situations. They also have a minimum age requirement. And say a member qualifies for both, there is some priority settings used on the back end. In short, a lot of the details of why fees can be waived, which was some of those reasons that we see here, and there's many other reasons listed, or potential reasons, such as the fee manually being waived or an OTB account is present. We definitely don't have time to get into all of those details, but there is help doc on the help page for this screen and a really detailed reference booklet that gets into this. So if you're assessing your fee programs and you are trying to collect and pull all this data together into trying to make some decisions about changes to fee programs or better tracking of your fee programs and impact of the waivers and system waivers and allowing members to staff to manually waive fees, then I definitely recommend taking a second to just become a scholar of the processes and the coding systems involved, especially when it comes to fee waivers. And when I say become a scholar of it, it's not just using these tools, looking at this data. It is really going and reading the doc. It really will help solidify the terminology and the language that you're going to use as you share this information, present it to your board or to your executives. Okay, so we used a couple of these as examples and sort of telling you what we're looking at when we're talking about opportunities and then fees that are charged and then the fee amount that is waived and that percentage. So if we want to see across, maybe we know that we made a policy change on how we're handling what's a good example? How we're handling transaction service charges or a config change on how we're handling transaction service charges. We could see the impact of that and quantify it at this point really easily because a year ago, July, the month before that change, this hypothetical change, we were charging just about all of the fees. At 1.4% were being waived. But now we've decided to get a little more open on those, and maybe enable a few more options for waivers on those. Get members a little excited about that, maybe started a rewards program or something. And now 18% are getting waived. So that difference, that quick difference, that's just focusing on the percent column helps some significant areas of significant change jump out to us. Another area of significant change is printed check fees. This is one I definitely want to dig into if I'm asking myself, why am I losing fee income? Where am I losing fee income? This is another one that I might focus on because we are now waiving fewer fees than we were before. I take that back. This might explain potential rise in fee income. Now there's some offset of the potential rise in fee income by the simple fact that there's less opportunities now compared to what there was before. So this one might be a wash, but that's another way to measure. Sometimes it's not that the answer is not that there's more fees getting waived or more reasons members qualify for waivers. It may just simply be that the product is seeing fewer opportunities as checks perhaps fade away from most members. Personal habits and digital services start to take their place a little bit more commonly. We see the total opportunities going down even. Same thing with printed money order fees, although the waiver ratio is generally consistent, we see less opportunity. And that's just quickly I'm talking through it, so hopefully it's making sense. These are the thought processes that I'm verbally outputting as I look through this. If I open this tool for any credit union, hopefully it's making a little bit of sense as you follow along. But I'm quickly picking out the things I want to focus on, dig a little deeper into, and understand a little better. And to understand them a little better, I'm going to look at those reasons fees are getting waived. I might even get down into the detail. I don't think I pointed that out, but if we're focusing on share draft non-return fees, we can go detail mode in the bottom left, and we could see literally the exact members that are either having these fees waived or being assessed these fees. Okay. Now, Couple other things I forgot to point out. Has probably been said or at least implied, but these are amounts. Okay, so this is $54,960 in charged NSF fees. If we want to see the number of fees that represents, that's 1,832 fees. Now, for most purposes, you're analyzing income, so you are probably most interested in amounts. But we could flip over to the count, the item count of fee opportunities, if we're trying to get a good picture, if a decline in the amount of opportunities is truly an actual decline in items being presented as opportunities, or if there might be some sort of fee schedule change that we, the analyst, are not aware of, and that if a fee went from $20 down to $10, that could easily explain why there might be a dollar amount decrease. But checking the counts here, we could see that it's at the same level. Just one way that we can confirm some theories or look at it slightly different. We flip it back to amounts, and then I'm going to redraw this screen by clicking the waivers button. So we're going to stop looking at a line count of different types of non-interest income and the opportunities, and then the waivers that are being applied for each one. And we're going to focus on specifically those reasons for fees getting waived, or any type of fee. So this is where we could make big statements about the credit union's configuration policies and settings, and start to, just do a diagnostic check on ourselves and say, have we been a little too conservative or too liberal on certain settings where we're letting $7,600 in potential fee income get waived because of an age minimum or maximum. Another area, when we look at the dollar amounts here, don't know that there's a lot you can do with non-return fees, especially if that's part of a rewards program, but you've got another $7,000 in fees getting manually waived, at least as of a year ago, slightly down as of July this year, but pretty consistent. So, as a credit union, this is an area, if you're using marketing clubs, this is an area you can do a temperature check on yourself and sort of assess and analyze if the assignment and rewards that are as part of being a marketing club is getting to the point where there may be more fees waived than you anticipated when you set up those marketing clubs. So that's probably it in here for the moment. Let's get out of the tool and think a little bit harder about the situations where staff are manually waiving or refunding fees. Okay, so let's close the loop a little bit on waivers. And we'll start with that one first and really address it from the angle of dealing with the fact that you've got people manually waiving fees. This is not just about your system configurations and assessing and analyzing what that impact might be on your fee income. We also can get quite detailed when we want to look at that idea of your staff having the choice to be able to waive that fee. Now, that's a wonderful thing. So, we shouldn't always have a computer making a decision on something like this. It is good to have people empowered with the option to proactively waive a fee for a member based on the situation as they are dealing with it in front of them. But this is one area where, it's certainly an opportunity to look and see if there is, if policies are being followed, or if policies should be assessed. Maybe they're a little bit too liberal or a little bit too conservative, depending on what your current position is. So 372 is fee waivers history by employee, and it's a pretty simple dashboard, straightforward, I think is the term I'm looking for, where we get to anchor on a certain time slice, and it's August right now, but we could go right back to July or June, at least 90 days, of course. And it gives us a summary and of employee level fee waiver actions by type of fee. So I already sorted by the number of transactions, but we could have seen, let's pick on employee LS here. Okay, so employee LS has done manual waivers on cash check fees, printed check fees, wire transfers, printed money order fees. You see what I mean? So we could group all the types of fees together. Let me get LS out of there. Okay, so on cash check fees, just a quick scan is this employee C9 here. Looks like they are the largest processor of fee waivers on cash checks. And yep, that's about it at $340 for $1,500. So this one employee waived $1,500 this last month on just cash check fees. Now that might be the person who just handled the most people. That doesn't mean that they're waiving fees at a rate that is a whole lot higher than everyone else. Of course, look at some of those other factors. But this is the ranking system that can come into play when we want to look at an employee level amount and volume of fees getting waived. Okay, so we can answer some of those questions in here. And that deals with the manual waivers. Now there's also, of course, manual refunds, and these are that other side of the coin where, of course, you're not realizing non-interest income because you had a fee posted. It was income until an employee essentially credited that fee back to the member. And we can look at those. Tool 370 will let us look at this somewhat similarly to the Tool 372 with waivers, but because it's a different data source, we're dealing with different data fields. We can still see amounts, and in this credit union's case, they have a special auto loan cash back that's showing up. This is clearly not a fee credit or fee refund. This is a special program. So one of the questions we get quite often is, okay, then what's feeding this dashboard? How does it know to find a refund? And the answer is in the help documentation if we click the italicized I, but just briefly, this dashboard is pulling out anything that negatively impacts an income GL and was posted under the origin code of 08 for error correction processing. So I don't know why this credit union chose to process some of their cashback refunds through the error correction processing tools, but that is why this legitimately shows up in these results, for example. So of course, any analysis needs to subtract something like this. So of course, use your critical thinking skills as you look at all of this data, ask where the data is coming from and how this is getting pulled in any of these tools. So we're just using this one as an example. And that explains that. So if we want to pick on NSF fees, you'll notice another thing too here is one particular type of fee refund may be written in several different ways. So on NSF alone, we have 4 different results, and looks like this one didn't come up with any variations on refund NSF fee. The rest are legitimately not NSF fees, but I have often seen something where one person writes in the full refund NSF fee, and then the second staff person writes in REF dot NSF fee. These variations in spelling are entirely at the liberty of the staff person to write it a different way if they'd like, but it does mean that it's going to create a new line item for every single variation in spelling, just because of the way it gets pulled out of the data. And it is smart enough, as you can see, to find patterns of spelling. Sometimes, in this case, a few that we don't want to see, but it's pretty easy to subtract those if we're trying to pull that out. Yeah, so this is the one place where you can come in and see if you are evaluating those numbers. Remember in Tool 369 when we were looking at opportunities and then waivers where the fees were waived, that remaining number of fees that did not get waived and were recorded as charged were still pre-subtraction of refunds, right? So we said the fee was charged, the fee was assessed, but we didn't track that data through to see if it later got refunded. Here is where we are showing you when something later got refunded, and you would need to take those amounts for the different fee types and subtract if you're looking for true net non-interest income on these types of fees. All right. So real quickly, we won't spend a lot of time in it, but I want to make sure that we see the skip a payment dashboard. Okay, so Tool 817 I don't know if this is one I don't think I did mention this one right away, but when we open this up, we get a item by item detailed level view of each skip that has happened in the time period this dashboard is set to. We could go back years or as far as you've been running skips through the system. If you have a homegrown skip process, where you're posting things manually through other tools, then this dashboard will not show your data. You do need to be using the CU-based core systems processing skip program tools. But if you are doing that, this data will populate for you, and we get a quick summary of critical information like how many fees in total amount have been paid on however many skips have been done in this time period, in this case 47. And that addresses $20,000 in payments over this time period as well. So $20,000 in payments was skipped, deferred, for that non-interest income of $1,880 in this case. You could pick any, like I said, any date frame or a specific program. If you have a special holiday skip, for example, we might use this lookup and choose that one. And you also can evaluate your different delivery channels of the skip offered to see if members are finding it online and proactively sort of self-servicing the skip-a-pay, or if they're needing to talk to a staff person and it's being processed internally through the system. So you can evaluate the success rates and income through either one of those sources as well, the digital channels or the direct face-to-face channel. Now, I mentioned tool 1220 earlier, the activity validation dashboard, but I'm not going to go into it today. Actually, I think if you've been looking into this data, you know what your GLs are already at this point in time. You would just point this dashboard at whichever GL you're looking to study, and it gives you that variation in comparison calculations and time slicing that will supplement the couple of different tools that we saw in analytics booth and do exist in the core today. I think it was 1011 for the 10-year trends, 018 for 3-year balance comparison on the GLs. So a quick note that 1220 is a tool of interest to you for this topic, but I will skip through it at this point because I want to make sure we touch the EFT portfolio dashboard. So it's this whole package of portfolio dashboards, and tool 594 is related to EFT usage. And why are we looking at this one? Well, just a quick word on profitability, membership profitability analysis. Okay, so this class is not about covering membership profitability and where non-interest income on that membership might fit into the picture, but I mentioned early that interchange income is something that a lot of you look at for various reasons, including membership profitability. Or maybe you don't, okay? So membership profitability can be as simple as interest income minus dividends paid. Or it can be as complicated as, your vendor of choice that you partner with might want to calculate for you. So there's this whole spectrum of philosophies and methodologies for calculating that out. And of course, just a quick reminder, we don't store for you your interchange income on all the plastics transactions. We really don't have that for you. So the closest we could give you is those volumes of how many transactions are getting pushed through debit cards, credit cards, and what's PIN versus signature, so that you can do some rough calculations. If you say on average our interchange income is this % of the transaction amount, or this amount per item, whatever that number may be, is what you can apply to the calculation and multiply the numbers, the volume activity numbers that you're seeing from this tool by that estimated interchange number, and you'll get some close numbers, estimates. Of course, there's probably other sources you have. This is totally optional, but this is one strategy I've recommended when people want to pursue that using at least partial CU-based data. Okay? So this is where I will close us today, I think. Thank you very much for spending the time with me to work through these resources and data on the topic of non-interest income. So if you have any feedback or ideas of this topic or any future topics that you'd like to see us cover, definitely open to hearing it, and I hope to see you again in one of our next sessions.